Welcome to Lento English. Ready to level up your English? Here we learn through stories, slow, clear, and fun. Listen, relax, and enjoy the journey.
One introduction. South Korea faces a big money problem. Many people in the country owe a lot of money. This is called household debt. This debt is very big and it is growing quickly. This situation is a serious challenge for the country. It affects many families and the whole economy. People borrow money for many reasons. They might buy a house, start a business, or pay for education. Sometimes they borrow for everyday needs like living costs. When many people owe too much, it can become a problem for everyone. The total amount of money owed by people in South Korea is very high. It is one of the highest in the world. This means that South Koreans have borrowed more money than people in many other countries. This large amount of debt is a main topic of discussion. People want to understand why it is so big and what it means for the future. It is a problem that touches many parts of daily life. This big household debt can be a risk for the country's economy. When people owe a lot, they have less money to spend. If families use most of their money to pay back loans, they cannot buy new things. They cannot go shopping or eat out as much. This slows down businesses. When businesses sell less, they make less money. They might not hire new workers. This can make the economy grow slowly. Also, if many people cannot pay back their loans, banks can have problems. Banks lend money to people. If the money does not come back, banks might lose money. This can make the whole financial system weak. A weak financial system can hurt the entire country. It can make it harder for businesses to get loans or for people to save money safely. So, the debt of many families can affect the financial health of the whole country. It is important to find ways to manage this problem for stability. A famous TV show helped people around the world understand this money problem. The show was called Squid Game. It showed a story about people who had big debts. These people were in very difficult situations because of the money they owed. They had lost their jobs or their businesses failed. Some could not pay for their homes or their families' needs. The show made it clear how much pressure people felt because of their debts. It showed how desperate some people became when they could not find a way out of their money troubles. Even though the show was a story, it showed real feelings and real problems that many South Koreans face. It helped people outside of South Korea see the serious side of household debt. It showed that this is not just about numbers or economics. It is about people's lives, their hopes, and their struggles. The show made many people think about the difficulties that come with owing a lot of money. It gave a clear picture of the big debt problem in South Korea and its human cost. 2. A look at the numbers. South Korea has a very big challenge with the money that families and people owe. This is called household debt. When we look at the numbers, we can see how large this problem is. This amount of debt is one of the largest in the entire world. It is higher than in many other countries. Let us look at some important numbers to understand this situation better. One key number is called the household debt to GDP ratio. This ratio helps us compare how much money people owe to how much money the whole country makes in 1 year. For example, if this number is 50%, it means that all the people together owe half of what the country produces in a year. At the end of 2024, This ratio in South Korea was almost 92%. This means that the total amount of money owed by households was nearly 92% of the country's total economic output for that year. This was the second highest among 38 major nations around the world. This shows that people in South Korea owe a very large sum of money compared to the country's total income. In some past years, this number was even more than 100%. This meant that the total money people owed was more than the country's entire economic output for that year. This is a very high level of debt. The total amount of money that people in South Korea owed was truly massive. In February 2025, this total household debt reached over 1,143 trillion won. This is a very large sum of money. To help understand this, it is about 787 billion US dollars. This huge amount of money is owed by millions of families and individuals across the country. What kind of debt do people have? Most of this debt is for buying houses. These are known as mortgage loans. When people want to buy a house or an apartment, they often borrow a lot of money from banks. This type of loan makes up a very big part of the total household debt. It is the biggest reason for the high debt numbers we see. People take these loans to have a place to live, but they become a large financial burden. Another important part of the debt comes from personal loans. These are loans that people take for different reasons, not just for houses. For example, they might borrow money for daily spending, for paying for education, for starting a small business, or for other personal needs. These personal credit loans also add a lot to the total money that households owe. They are a significant part of the financial obligations for many people. So, when we look at these numbers, we can clearly see that South Korea's household debt is very large. It stands out when compared to other countries. The total amount is enormous, and much of it is tied to housing, with personal loans also contributing significantly. These figures highlight the scale and seriousness of the financial situation for many people in the country. 3. Why is there so much debt? Why do people in South Korea have so much debt? There are a few main reasons. These reasons have made it common for families to borrow a lot of money. One big reason is the high cost of buying a house. Homes, especially in large cities like Seoul, have become very expensive. Many people dream of owning their own home, but to buy one, they need a lot of money. Most people do not have all that money saved, so they must take out very large loans from banks. These loans are called mortgages. Without these big loans, owning a home is not possible for many families. The rising cost of housing has pushed many people into significant debt. This is a major part of the total money owed by households. Another special reason is a unique way of renting homes in South Korea. It is called jeonse. In this system, renters do not pay money every month like traditional rent. Instead, they give the landlord a very large sum of money at the start of the rental period. This money is a large deposit. The landlord keeps this money for the entire time the person lives there. When the renter moves out, they get their full deposit back. However, this jeonse deposit can be extremely big, often hundreds of thousands of dollars. Many people do not have all this money saved. Because of this, they need to borrow large amounts of money from banks to pay the giant's deposit. This adds a lot to the total debt of many households. For some time, borrowing money was also very cheap. Banks offered loans with low interest rates. When interest rates are low, it costs less to borrow money. This made taking out loans seem like a good idea for many people. It felt easier to borrow for houses, for giants' deposits, or for other personal needs. Low interest rates encouraged more people to borrow more money. This situation made the total amount of household debt grow much faster over time. People saw it as a good chance to buy what they needed or wanted. Finally, some government actions also played a part. Sometimes, the government tried to help the real estate market or make the economy grow. They made plans to help people buy homes or to improve the financial situation for citizens. These plans were often good for the housing market. But sometimes these plans also made it easier for people to borrow money. This meant that without meaning to, some government policies helped the amount of debt grow. For example, some rules made it simpler to get a loan for a house. This added to the overall debt problem that families faced. 4. What the government did. The government in South Korea saw that many people had too much debt. They understood this was a big problem for the country's money system. So they decided to act. Their main goal was to make it harder for people to borrow a lot of money, especially for buying homes and other large purchases. One important step was to make new rules for lending money. These rules are called loan-to-value, LTV, and debt-to-service, DSR ratios. LTV means how much money a person can borrow compared to the value of the house they want to buy. DSR means how much a person can borrow based on how much money they earn. By making these rules stricter, the government limited the amount of money banks could lend. This meant people could not get very big loans as easily as before. The government also stopped certain types of loans for houses. For example, they put a limit on how much people could borrow for houses in the main city area, like the capital. Also, if someone already owned many houses, it became much harder for them to get new loans for more houses. This was to cool down the housing market and stop people from borrowing too much for property. Another thing the government did was to help people change their loans to safer types. Many loans had a variable rate, which means the interest rate could go up or down. If rates went up, people had to pay more each month. This was risky. So the government encouraged banks to offer fixed-rate loans. With a fixed-rate loan, the interest stays the same, making payments more predictable and safer for borrowers. They also pushed for amortizing loans, where people pay back some of the main loan amount each month, not just the interest. To prepare for future problems, the government introduced a new test. This test was called Stress DSR. It checked if people could still pay their loans even if interest rates went up a lot. Banks had to use this test before giving new loans. This helped to make sure that new loans were given only to people who could really afford them, even in difficult times with higher rates. Finally, the government created special programs to help people who were already struggling with debt. These programs offered different kinds of help based on what people could afford to pay back. The idea was to give support and solutions to those who found themselves in financial trouble, helping them manage their payments or find a way out of their debt problems. These steps showed the government's effort to control the growing debt and protect the country's money system. 5. How debt affects the country's money. When people in a country owe a lot of money, it changes how the country's money works. One of the biggest changes is that people have less money to spend. Imagine a family that earns money each month. If they have a big loan to pay back, a large part of their income goes to the bank. This means they have less money left to buy new clothes, go to restaurants, or enjoy fun activities. They might even cut back on important things like health care or education. When many families spend less, businesses start to feel it. Shops sell fewer goods. Restaurants have fewer customers. Companies that make things might produce less. This slow spending can hurt businesses a lot. Some businesses might earn less money, and some might even have to close down. When businesses do not do well, they might not hire new people, or they might even let some workers go. This can lead to fewer jobs in the country. This slowdown in spending and business activity makes the country's economy grow more slowly. Economic growth means the country is making more money and creating more jobs. But when debt is high, this growth can stop or become very small. A slow economy means less wealth for everyone and fewer chances for people to improve their lives. Another big risk from high debt is to the banks. Banks give out loans. They expect people to pay this money back plus a little extra. But if many people cannot pay back their loans, banks lose a lot of money. If too many loans are not paid back, banks can get into serious trouble. This can make the whole financial system weak. The financial system is like the heart of the country's money. It helps money move around from people to businesses and back again. If banks are weak, it can be harder for people to save money or get new loans. This can make everyone worried about their money and the future. Finally, a country with a lot of debt can become more open to problems from outside. Imagine the world economy is like a big ocean. Sometimes there are big waves, like global money problems or sudden changes in prices. If a country's people have a lot of debt, it is like a small boat with holes. When the big waves come, the boat is more likely to sink. For example, if interest rates go up around the world, it costs more for people to pay back their loans. If there is a global economic slowdown, people might lose their jobs, making it even harder to pay debt. High debt makes the country less strong to face these big outside challenges. In short, a country's money situation becomes less stable and harder to manage when its people owe too much. 6. How debt affects people's lives. Debt causes much worry for people in South Korea. It is a big problem for many families. Young people often feel this stress a lot. Also, people who work for themselves, like freelancers, can have unstable money. This makes it harder for them to pay back loans. When people have a lot of debt, they feel a heavy burden. They worry about how to pay their bills every month. This constant worry can affect their daily lives and their happiness. It is not just about money, it is about how people feel inside. The pressure of debt can make simple tasks feel difficult and reduce overall well-being. It can be a constant background noise of concern. This money pressure can lead to bad mental health. When people are very stressed about debt, they can feel sad or anxious. Some people even feel hopeless. This is a serious problem for the country. The stress from debt is one reason for mental health problems in South Korea. It can make people very unwell. In some severe cases, this financial strain has been linked to a higher rate of suicide. This link between money problems and how people feel in their minds is important to understand. It shows that debt is more than just numbers on a paper. It affects people deeply and emotionally. Debt can also make the gap between rich and poor people bigger. People who already have a lot of money and assets, like houses, can use debt to buy more things. For example, they might take a loan to buy another house or invest. This helps them get even richer. But for people with less money, debt is often a burden. They take loans for basic needs or high-priced housing, which is often their only way to afford a home. This makes it hard for them to save money or get ahead financially. So debt helps the rich get richer and can keep the poor struggling. This makes the difference in wealth much wider in the country. Furthermore, money problems from debt can change big life choices. Many young people want to get married and have children, but if they have a lot of debt, it becomes very difficult. Buying a house is very expensive, and people often need big loans for it. If they cannot afford a house or have too much debt, they might delay getting married. They might also decide not to have children or to have fewer children than they wished. This is a big concern for South Korea because the country already has a very low birth rate. Debt plays a part in this trend, affecting the future of families and the country's population numbers. It shapes personal dreams and societal growth. 7. Did the government's plan work? The government worked hard to control the growing amount of money people owed. They put in place many rules to slow down new loans. For a time, these rules seemed to help. For example, after new, stricter rules were made, fewer people asked for new loans. This was a good sign. Also, the government encouraged people to change their loans. Many loans used to have interest rates that could go up or down. The government wanted people to switch to loans with fixed interest rates. This meant the amount people paid each month would stay the same. This made the loans safer and more stable for families. It helped reduce the risk that people could not pay if interest rates suddenly went up. However, even with these efforts, the total amount of money people owed remained very high. It was a difficult problem to solve completely. While new loans slowed down, the huge amount of old debt was still there. It was like trying to empty a very big bucket by turning off the tap a little bit. The water was still there and some was still coming in. Some of the government's new rules also caused unexpected problems. One problem was called the balloon effect. When it became harder to get loans in big cities, people did not stop borrowing money completely. Instead, they started to borrow from different places. They might go to smaller banks or other financial companies in different parts of the country. Sometimes, these new lenders charged higher interest rates. This meant that even if people got a loan, it might cost them more money in the long run. This effect made it harder for the government to control all the borrowing, as it simply moved to other areas or types of lenders that were harder to regulate. The government also started programs to help people who were already in trouble with their debt. These programs aimed to give people a fresh start. They helped people change their loan payments to make them easier to manage. However, the results of these programs were mixed. Many people who went through these programs still found it hard to get a good credit score later. A low credit score can make it difficult to borrow money for important things, like buying a house or starting a business, even after their debt payments were changed. In summary, the government's plans had some success in slowing down new borrowing and making some loans safer. But the problem of high household debt continued to be a big challenge. The unexpected issues, like the balloon effect, and the ongoing struggles of people in debt relief programs, showed that fixing this problem was much more complex than just making new rules. 8. What happens next? The future of household debt in South Korea is a very important topic. Many people, including government leaders and money experts, are thinking about what will happen next. The large amount of money that people owe is still a big risk for the country's economy. This risk could make the economy weaker if not managed well. To control this problem, South Korea needs a clear plan. This plan must work for a long time, not just for a few months. It also needs to use many different ideas and ways to solve the problem. A single solution will not be enough. One main goal for the government is to slowly reduce the total amount of household debt. They want to bring the debt-to-GDP ratio down. This number compares the total money people owe to the country's total economic output. The government's aim is to make this ratio smaller and more manageable. This means that the total money owed by households should become a smaller part of the country's overall economic activity. This important change will not happen quickly. It will be a slow process that will take place over many years. To achieve this, the government will probably continue to make rules about lending money. They might keep lending standards strict. For example, they may limit how much money people can borrow when they buy houses. They might also check carefully if people can truly pay back their loans. However, this is a very difficult balance to find. The government must be very careful not to make the rules too strict too fast. If they do, it could cause big problems for the housing market. It could also hurt the economy in general. The challenge is to reduce debt without harming the country's economic health. Besides strict rules for lending, other important ideas are also being discussed. One key idea is to help people earn more money. If people have better jobs and higher incomes, they will find it easier to pay back their loans. This can happen through strong economic growth and by creating many new job opportunities for everyone. Another very important idea is to make the social support system stronger. This means providing more help for families and individuals who are struggling with money. A strong social safety net can give financial support to those who need it most. This can stop debt problems from becoming much worse. In the end, solving South Korea's household debt problem needs more than just quick solutions. The country needs a deep and long-term strategy. This strategy must look at the main reasons why people have taken on so much debt. For example, the very high cost of buying a house is a big reason for many people to borrow money. Also, differences in how much money people earn can make the problem worse for some. If these main causes are truly fixed, South Korea can have a much more stable and secure financial future. This will help every person in the country and make the economy safer and stronger for many years to come.